Good morning, everybody. It's Thursday, 9th of June. We're going to do some market analysis, see what the markets have been doing overnight and today, see if we can look for any sort of interesting trade areas. And, as always, I always start with a risk disclaimer. Make sure you understand that trading is risky and that you should know what you're doing. Here's my details. Head of Trader Education at Zenfinex. Lots of experience in trading discretionary and algo systems. And, today we're going to look at the charts from a sort of pure technical perspective. Here's the agenda for today. We're going to also look at some of the tools that Zenfinex have that might help you with your trading. So let's just go straight to charts and we'll see what's been happening overnight in the US and other places. We'll also look at what happened as a result of our analysis on Tuesday and see if it's still valid. And I'm going to really start with, what happened overnight, then we'll go to our individual charts. We've seen the S&P in a nice sort of upward trend, hit its sort of creating a bit of a double top here from a daily perspective. And really, this has been caused by the surprise interest rates from the Bank of Canada on Tuesday, or yesterday, I think it was. And that's really changed the market's perspective on the possible rate hikes for the month of June, which was expected to stay the same, but it's actually looking likely that it's going to increase. So that's definitely been factored into this rise in the S&P. And what else has been happening? So, as I said, from a general perspective, negative, I probably see the market sort of coming back down to this level here and seeing if it could bounce off this support to continue its upward momentum. We'll look at trade areas in a second, but we can see we've been in an uptrend. We broke out from this sort of sideways action here. This is just really just sort of general analysis. We'll start looking at trading opportunities in a second. But here we can see after these couple of big moves last week, creates a double top, which is always a sign of exhaustion or weakness, and probably is due for a bit of a pullback. And as I said, what's driving that from a fundamental perspective is the surprise interest rate increase. We're going to look at that and look at the Zenfinex tools and see how we could have taken advantage of that. So let's just go through the charts one by one, and just to see this breakout trade that we talked about on Tuesday. It did actually indeed break out. We were using this as a target, so anybody who took out the breakout on this would have had a nice opportunity to trade and make some points here. I'm going to strip all the charts back in a second, but let's just have a quick run through of Tuesday's analysis. Let's just move this thing out of the way. Hitting an important fib level and a level of resistance. You can see here, I hope you can see it. I might just go to a smaller time frame. Let me magnify this and go to a smaller time frame. So we drew our fibs in on Tuesday, and it's bounced off the fib back to resistance. And the key level now really is it going to break the 76.52 level to continue on its upward march, I would say, to sort of 77. It's been taken off the table a little bit with the interest rate because the theory being two central banks have raised their interest rates when everybody expected them really to be holding. And the thought pattern in traders' minds is, well, if they're going to do it, maybe the Fed will do that as well. So there's a little bit of cooling off. And I think there'll be a wait and see to see any indications from the Fed to see if they're actually going to hold as expected or increase interest rates. So let's wait and see for that. The yen, we'll do some analysis on the yen. Again, coming up to some fib levels, which we're going to draw very, very shortly. So I'm just skimming through these and seeing that anything's interesting. I did see a nice trend develop on the EuroCAD, obviously as a result, so I'm on a daily perspective. It's been coming off for some time, and our usual sort of trend line breaks and what have you. So I'll do some top-down analysis on this and see if there's still a small intraday opportunity to take on this, because I marked up this big drop down when the interest rate was announced. It's gone sideways. So effectively what we're looking for, similar to the gold trade that I mentioned earlier, is a breakout with a target area around here. Let me just put a cursor on so everybody can see it. A breakout of this from an intraday perspective. So we're looking at 15-minute charts here. And we're going to see if this consolidation is going to break on the upside or downside. I know that's you may think it's not helpful, but as a trader, you should be on guard for any particular direction. And remember, when we're looking for breakouts, we're looking for indications that one side or the other is giving up. And sometimes, and people sometimes ask me, how do I tell the difference between a fake out where prices just pop up and then pop back down again? That's something that how I avoid that. And it's not always easy, but I wait for a pullback and then a retest. So if I do see a spike and it goes back into the range, then that is a false breakout. If I see it break away, let's see if I can draw some line just so that you can see what I mean. Breakout here, obviously not to scale or anything like that, but that's kind of how you can avoid the fake outs. We want to see if when markets are pulled out of here, obviously sometimes they just completely, it never comes back and retest, but that's trading. There's no opportunity to trade. So you might as well keep it safe by waiting for a retest, in my opinion. The fact that we've had a little spike here, and I might just adjust my consolidation area now that we're down to the 15-minute level to make it a bit more accurate. So we're looking really for a move out of this consolidation, a retest, and then a target area probably just below the 43.72. And equally, if the momentum keeps going down, which definitely the trend is in a downward trend, is it going to come and retest this level of support? Was way back from February, hit it a couple of times. Remember, we're focused on support, resistance, using them mostly for targets and stop levels rather than anything else. So let's go back now and do what I normally do, is get rid of all my lines and see if there's any new trading opportunities on gold. So I'm just going to strip everything back. And those of you who regularly watch these videos and live streams, I always prefer to strip my charts back, start from a longer time frame, start marking up my charts with any new data or data that hasn't been picked up before. It only takes a few minutes. For example, this weekly that created a low here, that's now becoming interesting because it couldn't close above here. Let me put my cursor on so you can see it. Markets couldn't close above here, broke out, retest. So that's now acting as a level of support. So from a weekly perspective, I'm going to go down to the daily, and we can see that weekly is still relevant from a daily perspective. But we can see here that, and I might just put a peak here. So we can see this area here is really going to be a wick fill. So the question we have to ask ourselves is, from a daily perspective, if we're trading intraday, obviously we'll look at slightly different levels, but from a daily perspective, we're looking to see if this support holds. If it holds and we get any indication that there's strength coming into gold, and if I draw the trend line here from a daily perspective, we can see here that prices really since October have been oscillating upwards, uptrend, pullback, uptrend. Now we have to ask ourselves the question, is this a pullback? And if it's a pullback, it's going to go on to go and break these highs here, or is this going to fall out and start heading back to these areas here? So this is what I do on a regular basis, just look for consolidation, look for breakouts, either on the upside, downside, see what information I have that will help me determine direction. And we can then drill down to a further smaller time frame, which is 4 hours. So let's just have a look at 4-hourly charts, and we can see this whole consolidation area. So remember, again, from previous sessions, I look for breakouts from consolidation, and often a retest of those consolidation areas. So let's just draw in this consolidation from a 4-hourly perspective. By the way, if you have any questions regarding how I draw these, or what I look for, how I trade them, feel free to ask a question in the chat here. You're all welcome to participate. Again, people who come onto this regularly know that you'll get more out of it if you ask me a question, and that I can help you, because it usually draws out other information. So look, from a 4-hourly perspective, it's in a consolidation. That doesn't mean, right, that if you are an intraday trader, that you can't take these opportunities as well. And I will do another webinar on intraday trading, where whilst we look from a sort of longer term perspective, we can drill down to smaller time frames, and we can start looking at trading opportunities. And I might just, the fact that it's coming up and not, let me rephrase that, the fact that it's come down, hit the trend line, and we have this major level of support, if this can hold, then the breakout on the upside could give us some good opportunities. From a smaller term perspective, and I'll just remove this so we can drill down, and I don't usually drill down much lower than hourly, but I will go down to sort of even smaller time frames, just to see how the same setup or the same procedure works. So remember, I had a daily consolidation area. Well, from an hourly perspective, we have more consolidation. So let's draw that in, because, just again, as more of a reminder to the regular guys, is markets do this. They go sideways and they go up in an uptrend or downtrend, and that's all the markets do. That's nothing more or less. And if you can figure out which time frame suits your personality, whether you're a longer term trader where you'll be looking at breakouts from a daily perspective, or an intraday trader where you're looking for smaller consolidation areas, because look, again, I'm not a great person, a believer in, coulda, shoulda, woulda. But what I do here is the same thing I do all the time. I draw the consolidation areas, regardless of the time frame that I'm looking at, and then I look for a breakout to the next level. Obviously, if I'm going to be doing intraday trading, I'm going to put more horizontals here, which are more relevant from a shorter time frame. Because if we go back to the daily, look, we're miles away from a daily perspective. But if you're a slightly longer term trader, you're going to want to, stay within the direction of the trend. As you drill down into smaller time frames, it's the same thing. Where is the support resistance? If I pull out a little bit further, go back to the hourly, so we can see here that the breakout from this consolidation hit this level, and I'm pretty certain there is a level previously is the reason why this turned, and it's certainly the reason now. So let's have a draw here. So it bounced off this level here, it's come back to that level. In fact, it's, again, all these levels are sort of coming together, if you like, and that is what makes them more powerful. So if I just drill out a little bit further, you'll see that the line that I just drew was relevant. It's a pity I can't zoom in a little bit more here. Let's drop this and drop this. So the trade that we could have identified utilizing exactly what I'm just talking about here is that the target would have been around this area, not necessarily saying it would have been exactly down here, because I always like to take my profits slightly away from major support and resistance lines, just in case that's where the market's turn. Maybe some of you have done that. You've got yourself into a trade, you put a target in, you put a level in, and it almost gets there, but then it goes the other way. So I always take a view that if I do see a strong level, and again, look, I'm not showing you anything revolutionary, but look how prices turn at these levels. And these levels are the levels that I show every single day. So again, not knocking other strategies with indicators and oscillators and moving averages. You don't really need them. You need to understand how price moves, how prices turn, regardless of whether you're on an hourly time frame, a 15-minute time frame. See, same consolidation area. I'm not creating the wheel here. This is the same old stuff that has worked for me for years and years and years. Consolidation, breakout, retest, massive move up to previous resistance. What could be simpler, right? No indicators, nothing. And now we're down to sort of, and if I really get pushed and we go down to the 5-minute, so what have we got? We got consolidation. Let's see if we can find a trade opportunity. Look. So regardless of the time frame that you trade, we see some consolidation here, breakout, and I bet this level here is a previous level of resistance. The market's telling you when it wants to go sideways, when it wants to break out, and where it's likely to go. If I go back here, you'll probably see that this price turned exactly to this point here. So please do take notice of this, regardless of the time frame. And full disclosure, I tend to not go lower than the 1 hourly, only because I can place trades, go about my business, and I don't have to stare at the screens for 8 hours a day. I've done all that in my trading career, and starting at 7 a.m. and finishing at 10 p.m. London time, doing nothing but trading the mini S&P. Done all that. It's fun, but now I much prefer looking for these areas slightly longer term and taking trades based upon that. Are there any questions on anything we've covered? Because what I'm going to do with all these instruments is do exactly the same. And what you should try to do yourselves, if you want to be proficient, you want to be good at this, is find something you can repeat over and over and over again. I mean, it's as simple as that. Even if it's an oscillator that you somehow have mastered, whatever it may be, you need to find something with simple rules that you can repeat over and over again. And I've shown you my simple rules. There's nothing magic sauce about this, right? It's just look for consolidation areas, look for breakouts, go to levels that it's previously turned on. That's your strategy. Let's do that again on another instrument. Let's see if I can. I'm interested in the FTSE because mainly we're in this particular time zone, and I think the FTSE will consolidate a little bit because of the possibility of further interest rates. Even though everyone was expecting a pause, I think nobody knows, obviously, but the sideways action will be related to the possibility of an increase. Let's go. Let's do a complete top-down approach. All right, so let's get rid of everything. And just before I do, look, you'll see the lines that I've drawn here. We'll end up drawing exactly the same lines, but I want to see if there's been any new levels that change my view from bullish or bearish. And we can see here, just and we're going to do it. In fact, I'm going to get rid of all these lines, and we're going to start again. Get in the habit, or it's certainly my habit. Start with a clean chart, have a quick look at it. Takes minutes, right? You're looking at key levels where markets have turned. You don't have to be precise at this stage. All you're trying to do is frame the market. We'll go down to a daily perspective, and we can see here that we have more levels here, and we have another level down here. So from a daily perspective, these are the turning points we'll be looking at. There is another one here. where we were looking at some consolidation. Remember, this is from a daily perspective. We then drill down to a 4-hourly perspective and say, okay, from a daily, weekly perspective, this is the frame of the market that I want to look at. Very unlikely, that you're going to get big moves outside this particular range from a daily perspective, right? And if you drill down even further to smaller time frames, there's less likelihood. So these are kind of putting a frame around the market. We then will put some levels on this. From a 4-hourly perspective, we can see markets turned here, here. Now we're trapped in this particular range here. So now what do? We look at the hourly. All depends on your horizon for trading. Is it long-term, short-term, swing trading, intraday scalping? Practice yourself on how to do this. Look, I'm not doing anything special. What I'm doing is just showing you how to start framing the market and then looking for opportunities. Let's go out to the wider perspective. So these are the lines, the new lines that I've drawn now. If we look at the wider perspective, we can see that there's an obvious sort of trend here from a daily perspective. We'll tighten this trend line up a little bit, because as we get closer to price, we're not looking at it from afar. So price has bounced off this trend line, bounced off here. So now we're looking to say, well, this is obviously going to be a level of support. So we can draw in a level here. In the future, when prices come back to this, something's going to happen. Depending on the trade that we're doing at the time, we're going to be mindful of this. And if I expand this a little bit further, I won't bother putting any fib levels on the FTSE. Even though I know it's at a fib level, I want to look at this consolidation and see if there's an opportunity to break out of this. And I'll go down to a 1-hour level, or 1-hour time frame, I should say. And if I draw in some consolidation that's clearly building from a 1-hourly perspective here, right? So for my trading, nothing to trade with inside this box. If there's a breakout, we've got a nice move upwards, which will probably target this consolidation area. In fact, let me draw it as a consolidation area here. And I'm being very crude with this. Like, okay, when you're doing your own trading, you're going to be a bit more precise. I just want to show you the concepts, basically. And you can then start practicing them yourself and see if they work for you. So now, if I was looking for a break on the upside, I'd be looking at this as a potential target, right? So why is this a target? Well, prices fell through it, through the previous resistance, resistance, and we're stuck in this consolidation. So any breakout from here on the upside is likely to get back into this consolidation zone. And if it breaks on the downside, we may use a double order strategy where our first target is here and our second target is here. And we'll talk about trade management, entry points, trade sizing on other webinars, but that's kind of enough analysis today. I want to go back to the news side of it and just have a quick look at some of the tools that we have from Zenfinex and Zenfinex Plus, and I'll reiterate. In fact, let me just go through this, and so we look for some market news coming up. We're going to look at that in a second, but this is the platform that I'm going to use. It's absolutely free, so all you got to do is register, and you'll get access to some of the tools I'm going to use in a couple of minutes. I'm going to try to keep this this to 40 minutes maximum. So take a note of this particular domain. We're going to cover technical views and feature views and the economic calendar, which is very useful, and I'll explain why. So just take a note, free access, register, and let's go back to some of these tools and how I use them. By the way, before I go any further, are there any questions. If not, let's go to the tools. So this is the ZenFinex Plus tool. So this is what you can use depending on your skill levels. You know, if you're looking for trade setups in this portal here, you know, this particular platform will generate a number of trading ideas from a technical perspective, right? So let me just pull that down a little bit. From a technical perspective, it's saying USD CAD looking weak, trend down, and it's put some levels in. So if you want to, you know, do your analysis and then check with this, that's not a bad way of some kind of getting some validation if that's what you need. The British pound, again, these are from a short-term perspective, you know, 30-minute. By the way, just put in the chat box if you are already a member of the ZenFinex Plus, and then I can show you some other cool stuff as well. If you're not, I'll just show you the basic stuff, because then you can have a wander around yourself. And the featured ideas. Again, what it's looking to do is looking for patterns for you and then presenting some trading opportunities here. So if we look at the USD JPY, I don't know if I did any analysis on that today. I don't think I did, but it has come off quite a large uptrend, which we'll see if that continues, and the dollar index and interest rates, they're all kind of interlinked with that. So on this particular trade idea or featured idea, it says we found a pattern called the outside bar, June the 8th, which is today at 6 a.m. GMT. So what they're saying is they're bullish. They're saying that it's going to bounce off this, you know, this moving average, because there's an outside bar. Whether it will or not, obviously nobody knows. So, you know, use risk management, use trade sizing correctly, so you don't just take trades blindly. You know, my philosophy is that you should really learn to build a strategy. When I say build, I mean learn a strategy yourself, and that way it becomes relevant and personal to you. You get it. Whereas if you're relying on signals or other people's ideas, you kind of have to get in the head of other people. And I don't use these myself, but I can certainly point you to these and say, look, you know, there's some things you can look at for educational purposes, and they might be helpful to you or not. Let's have a look at another one here. So GB Oz, you know, so in a way, let's have a look at this one here. So what was found? We found a pattern called the engulfing line bearish. So this is a flag in a sense, and what it's doing is saying that if it breaks on the downside, then it will likely come down to these levels here. I don't think it gives levels here. I'm not sure, but you know, great for educational purposes. The tool that I find most useful is this Economic Insight, which is a great little calendar. It's great because you're able to do some analysis on news before it happens. So if we just look at today's news, so it's Thursday the 8th, we can look at very quickly what is likely to come up. Let me just make sure I've got that set for just today. And the only thing we've really got is jobless claims at 1:30 London time. And those of you who watched these before, you know what I do. I go to the impact side of the chart. I look at how previous news affected, in this case, the euro dollar, where the actual was lower than forecast, but higher than previous. So what it did was it gapped. We all know, anybody who trades news knows that markets become very volatile. But this can actually show you, you know, what was the volatility like last year, last month, or June the 1st, last week, I should say. So let's go to a 4-hour perspective and see how that news affected the euro dollar 4 hours after news coming out. So after that initial volatility has sort of subsided, and you know, we can see some consolidation here, by the way, breakout, retest, and in the direction. So some of the tools that I'm showing you here, can be used. So from a last week perspective, let's see what they're projecting today. And that can give us some ideas. So they're saying that the initial jobless claims will be, or forecasted to be, I should say, higher than the previous weeks. And this will have a high impact on the dollar denominated currency pairs. So keep an eye on that. And what I'll also show you is how the Canadian, I'm going to have to go back one day. And again, you can look back in time and say, okay, what was the news yesterday? What moved everything? House price index minus 1% year on year. You can go back and look at charts and say, okay, how did that affect the British pound? Again, often there'll be a bit of I'll go back to the 15 minutes for a second. You can see the initial volatility from the news. And then after a period of time, and you can select the period of time, 4 hours, it moved 50 odd pip in a 50 odd pip range. Doesn't mean it moved 50 pips away from the news item, but that was the range that it traded in. And the house price was X. So those of you who are interested in sort of looking at past news events and what impact they have, for example, Bank of Canada's interest rate decision, we can look at what happened, and this was yesterday. So as soon as the rate was increased by 0.25%, markets shot down, but ironically kind of finished up almost exactly where they were before the news. So that was more of a shock, readjustment, and we can look at the USD CAD on our charts and see what has it done. And I think from memory, it's continued on its downtrend basis. Let me just do that while I'm thinking about it. So if I go to the USD CAD, just bear me for a second. Let's go to the USD CAD. Got to create a new chart for that. Just bear with me. So news was announced yesterday. We saw what happened sort of 4 hours afterwards. If I put that into 4-hour perspective, so here was the news, kind of consolidated and now broke to the downside. And if I drew my support and resistance lines, I bet you that turned exactly at one of those levels. I don't have time to do that today. Okay, so I think that is all for this morning. I've tried to keep this between 30 and 40 minutes. Unless there's any requests for me to look at a particular pair or any questions on, how to, find these areas, please ask now or send me an email. I think I'll put my email on there, but just send a message on chat and I will reply to you directly. So let's go back to this. And that's just playing up a little bit. So I can see that there are no questions. And if there are no questions, what I'm going to do now is just sharing here. And we'll call it a day for today. Thank you for attending. Thank you for watching, and I hope you learned something.